Good afternoon, all. CamelbackTrading.org coming to you this Monday afternoon, October 11th, and we are looking at Window Trader's market profile of SPY, IWMN triple Qs. And what looked like early this morning was going to be a very disappointing day for the bulls, and then a disappointing day for the bears after the bears looked like they were going to fill the gap pre-market, only to open with a small gap, rip up in A and B, and looks like there's a good chance for an outside day up. Well, lordy, we end up with an outside day down. Now, the volume's only 58 million with all these moves, but meanwhile, we had a move of 560 and change. But not only did we have that kind of move, it's even more than that because A ripped up and then we took all that back. So it's like an $8 move we had from the day's high. From the day's opening to the high, back down, and then rips below the day's low in A. Utterly amazing. Russell, Qs, same thing. We all go out with price probes. Triple Qs open with a gap lower, fill the gap from the 7th, fill today's gap, goes back up, misses, right? Didn't even get to Friday's high, and only to flush out and finally get their IB late in the day. Russell opens, no gap, inside day down, only to see it fail, go back up. It looked like a possible look up below and fail. They could not get Friday's high, though, and they end up coming back down and having an inside day down and a price probe. And for us, we look like a look below and fail in A. We get to the other side of the range, which is the expected response, which is Friday's high, take it out. This all happened in the first hour, folks. And we stayed up there, pulled back. Now, I did okay on a long, but boy, oh boy, I'm glad I'm not stubborn. Wait till I go over my trades. I'm happy I've changed. Not being stubborn and changing or getting out when the market-generated information tells me to. Because today in A period, the first time we got up to the 20-day moving average, I missed the short. And it came in right away about 30, 40 cents. I was like, man. And so the second time it went up, I actually took it. And I'm like, that's probably not the smart move. It was a 25 put play, the 439s. Well, obviously, it started getting above the 20 and started moving. So when it looked like the tempo and volume was changing to the upside, I took off the 25 put play and I lost on and bought 200 of the 437 calls and watched it pop. And had a really good trade. Now, again, I did not hold them all the way up, A and B, but it turned out to be a really, that's a touchdown trade for me. Then in A, actually, I was out of the calls in A. In A, I actually took a short quickly when I got out of my call right around the afternoon rally high from Friday to 441s, and those paid me. So I had a very good A period. I lost on the first trade, but crushed it on the long and made small on the second short. Then in C, I took a long against, we had singles and the one-time framing up, the 438 calls. Did okay on them, nothing special, but I made money. Now, here's where I really could have gotten hurt. I told the room, this is amazing about value. Value went from lower, overlapping to lower, unchanged, overlapping to higher, back to unchanged, and ends overlapping to lower. That's a lot of movement, folks. When we pulled back, value was overlapping the high. I'm like, I think the bears got whatever they wanted, so now I'm looking for an afternoon pullback low. The indices were up, not a lot, but value was overlapping the higher. We had a 5-wide POC. We hadn't taken out the IB yet. That was the one negative I told the room. Said if we had taken out the IB higher, I'd be a lot more comfortable on this pullback, but we didn't, which left everything on the table. But I took it anyway. It gave me enough time. I'm trying to think where I did them at the time because where half back was and everything else. I bought a small one. I think I bought a 15 lot. Then I bought more, and then I bought a size kind of towards F's low at the time, and it pulled back up enough where I made money. On all, I had 40 left. It came back down. I could have taken them all off for money. When it came back down, I took the 40 off for basically scratch that I had left. I think I had 165, if I'm not mistaken. At the biggest, 100 at the lows, so I did well. Then G period. Took another very small long, thinking, okay, maybe G's the afternoon pullback low. I held it for a little while, made money, but not a lot. And then I was like, something's changed here. No more longs. I still wasn't looking for a short yet because I'm like, we still have overlap in a higher value. We haven't gotten the opening yet. And then you saw what J did. So what what H did. So when I opened up and we had some singles, I started scalping small shorts, the 438 puts that paid. Did that twice in I. And then when J looked like it was going to take out the one-time framing down, I did a little bit of an innovator call, a 435 call, not a big one. Took that up to almost, did well on it. And again, it was small, but took it off. And then I told the room, I'm pretty neutral here in K and L. I didn't have a good feel if we were going to go back above the opening or do what we did. And then obviously M is a master at taking control. They took out the day's low, went and got the gap, just missed out price probe by 9 cents from back on whatever day that was, the 6th. So not a good close by the bulls, but I had a good day. As far as destinations for tomorrow, upside will be L's low, price probe 435.85. Then we don't have anything to the afternoon rally high. J 437.32, and then 440.26 today's high. For the downside, we have today's low, which is 434.62. Then we have the price probe 434.53. Even though we traded there in N, to me it's not out until we trade their regular trade hours. That's K's high from the 6. Then we have those sets of single prints that you should have all this written down, the 2 sets of single prints, and then the afternoon pullback low. Now, from that day, here's where things get dicey for the bulls before I go to the charts. Kind of my line in the sand here for bulls now. October 6th sees high. That's where change took place when we went trend. And then we gapped higher on the 7th. We've been trying to take it back on the 8th. Tried to take it back. Today, finally did when we got the gap fill. So this is the last line of defense for the bulls. If we hold these singles, that's where change took place. Any acceptance below C's high from the 6th, well, guess what? You're talking about last week's low coming into the picture soon, right? You have daily low, weekly low, and I'll tell you what, if those two lows are close to each other, if they fall, you're going to go see finally what we've been talking about, July's low. And then quickly on the chart, monthly, still balanced to down, right? Still balanced to down. Next target is July's low. Weekly, still down, one-time framing down, 5 weeks, not including today. So nothing's changed in the bigger picture. And the daily went from balance to down, outside day down. So where it looked like we had a chance for an outside day up, we ended with an outside day down. Look at Thursday's candle, look at today's candle. And this is 3 days in a row, back and forth through the 20, and we closed below it today. So remember I said if we get sucked into this big balance, the destination is that low. That's the weekly low. Now, the only thing that they have left to lean on, like I said, is from this day, October 6th, those 2 sets of single prints. Below C's high from the 6th, you will go see last week's low. Volume right now, again, that's one thing that's not good, 61 million. We'll see what happens tomorrow. I hope you had a good day trading. Have a lovely evening, and we'll speak prior to the opening tomorrow.